All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for July 5th, 2023. Happy birthday to my brother. We'll start with the 30-minute hybrid swing portfolio, starting with Alcoa, 30-minute charts. We initiated a COTA 2 short today. It's holding about plus one. Standard risk. It broke through the PSAR after making a high. Target will be the RL10. AI continues to do pretty well. Fridays, or Mondays, I should say. Mondays, COTA 2 paid off pretty well today with a 1, 2, 3, 4, plus 5, and has cleared the previous hump of the RL10. So the next target is the 10-day high up around 44. That's looking pretty good. Caterpillar, we closed a 0.3 loss today. The COTA 2 continuation from Monday did not pay off. We exited here for minus 0.3. It continued to sell off. This is a candidate for some additional short side tomorrow. I did not want to hold that overnight, so we didn't take it. Cliff was an intraday one-day gift. In the short session Monday, it peaked and then closed poorly, and then had a big gap down today. And at the next sign of weakness on the OR3, we got short with a standard risk. This thing sold off, came to the edge of the dragon, exited there. So there's 1 unit of risk, 2 units of reward, plus 2 in Cliff, no overnight risk. CVS, we closed Monday's speculative COTA 2, which started really well, closed poorly. We decided to hold it. It gapped down, so we got out of there with a no lose plus dinner for 2. Happy to survive that one. Just in time to watch it reverse sharply, which I missed, and then reverse sharply again, which I missed. So CVS is definitely in play. It should be a big mover tomorrow. Dish plus 1 on the 1, 2, 3 entry this morning, and then it peaked, and I just wanted to get paid and no overnight risk. Devon Energy, no trade. I absolutely missed the short on this one with the big gap up. Big gap up from here to here, and then a harsh sell-off and slide the rest of the day. Span of control issue. Electronic Arts, no trade. Emerging Markets, no trade. Missed the continuation short on that one over the last 2 days. It just span of control. Ethereum, no trade. Mexico, I initiated a COTA 2 on support at the PSAR. It closed pretty well. It's holding plus 1. EWZ, this one caught me. It closed here, gapped down hard to here, sold off, gave me a 1, 2, 3. So I was looking for this and suffered a minus 0.6, and then missed the continuation revenge trade. So was definitely out of form on Brazil. Intel initiated the COTA 2 short. That's holding plus 2. Intel, I'm sorry, that was Intel, not Brazil. IP, this, oops, I forgot to mark this one. This one got us out at a scratch after holding such a promising 2-day trade. the big gap down and sell off. Lucky to get out of that with nothing. So this is one of those, what do you get when you hold on for more? If you're not careful, you get nothing. IYR initiated a Kata 2 on a 1-2-3 entry. That's basically a scratch right now, but it looks promising. Regional banks, no trade. They seem range bound to me. They're running out of interest. My brother has asked me to add MAT, Mattel. I wish he had told me that like 10 days ago. That's a pretty compelling set of PSAR flips. I initiated after the RL10 bottomed out and recovered. I took the RLXD entry just to get some skin in the game. It closed pretty well, so we're holding +1. And then if it breaks above 20 and a quarter, this has a chance to go. So that's a new add to our symbol stack. McDonald's, we closed this last trade pretty nicely. Missed the 2-day short. I took the intraday PSAR flip with a standard risk. Closed really well. I'm liking McDonald's right now. It's holding +2, and that feels like a pretty strong Kata 2 pattern in one of our favorite symbols. So I'm in that one for the long haul. Merck. That's setting up like a Kata 2. Didn't have as much follow-through strength as McDonald's, but that should be interesting tomorrow, because this is setting up nicely for a critical state trade right here. So we want to be short below that. We want to be long above here. And that gives us about, call it a 50-cent risk. And if we look over here on Merck, the R10 is 30 cents. And the range stat is almost $3. So a 50-cent risk box gives you a nice, like what we would call the R6. Microsoft, no trade. That is also setting up nicely in this consolidation box right here. If that holds, then I think we should be ready to trade that tomorrow and adding a position either above today's high or above the RL10, which is probably better at 343. You got to have a second position in by this point. This is as early as I would put in a second position, but I'll be ready to get long as soon as it breaks above this little consolidation. My risk box would be the PSAR. If you want a wider stop, you could use the start of the PSAR. That gives you a little bit more room. That gives you about a $3 risk. If you use this one, you're at about $1.50. Marijuana. So Monday was the free gift of this explosive move in an hour, and today it opened here and then started selling off harshly again. So I took the initial short, standard risk. It closed here, so we're holding +1, and this thing feels like it could quickly come back to 560. At the first sign of strength, I have to get out with a no lose plus standard for 2. So I'll be playing that one pretty closely tomorrow. NVIDIA, we closed the Friday's gap and go trade. So this was that little sell off. The PSAR flip happened in this gap. It moved to here, so we got long. And today it ran all the way up to here and started crashing. So we decided to capture +2. Watched it close poorly. And so now this is turning into a nice critical state here. What's it going to do? Recover or bail? I think you have, if you were going to get short this, I think you have to get short at 420 and play that to about 408. that gives you potential $12 risk. So if you can manage about a $4 stop, that gives you 3 to 1. And this is about a $4 standard risk box, about 1% in NVIDIA. Clean energy, no trade. Just missed this altogether. This whole second leg up or third leg up just completely missed the boat. We got this one, we got that little taste, but that one just got away. I got to figure out why I couldn't get that. Since it's number one on the trading value list, I should have been better. So what am I going to do for tomorrow to be better? Well, I'm going to put a standard risk box around this thing, and I'm going to commit to being short from here or long from here with about a 20-cent risk box. So that's my commitment to tomorrow, to be better. Rivian, this is the gift that just keeps on giving. We talked about this one on Monday. After 2 double-digit trades, the big gap up, we held our nose, and it closed well to here. And today just continued that pattern. So we're holding 1, 2, 3, 4, 5, 6. Holding plus 6R on one position. I didn't have the fortitude to add a second position in here. I was just happy. The fact that it had a nice strong close tells me that there may be some more room in this one. Let's step out and look at a little bit longer term on this one, I think. If I go out to the 2 hours, this is where it starts to get, we're entering the problematic zone. Yeah, why are the standard risk boxes so small, Mullen asks, is because that's what the statistics say. It says the R10 is 1/10 of the range stat. The range stat is $1.35. $1.35 range stat means that's the average range plus one standard deviation of the last 30 days. That is just a statistical measure of how much it moves on a intraday basis. And so if the range stat is the maximum reasonable intraday move, and then you break that into 10 pieces, that gives you mathematically a small risk box, which allows you to, on a morning hook or something like that, and if you see that kind of a move where you can put one standard risk in from the low of the day, and you can play this thing in that direction after it's bounced, then you know that you have 9 to 1 potential intraday before it starts getting irrational. So if you start with a small risk box and it works really well for you and closes, you have created a whole bunch of market's money in here that eliminates your risk and allows you to use market's money to keep that thing going. But if that initial move doesn't work, it fails right away, you are paying a small fraction to be wrong for the potential of being right large in both directions. That's the essence of critical state trade framing. It's just math. That's all it is. All right, so if we look at the daily on Rivian, we can see that this is right in the critical state zone. And so this move right here has sort of validated the grind. If we think of this as the grind, this was every opportunity to fail further, and it did not. And in fact, it gave us a series of rising highs. So for almost 3 months, we have been stalking this thing, and it has not been failing, and this is the time that it chooses to go. Well, the last time it chose to go was here, and it went from this price level where we were up to this price level, and then it could not break out to go back to this price region around 30. So the question is this breakout at 21 its chance to go to 30? So that's plus $9 of potential upside gain. And it can move very directionally, as we know. So what I'm looking at this one is I've got about plus 6R in hand from markets money earned in this period from today, plus about 40R from the 2 previous days of multi-digit gains. So I have plenty of markets money with which to speculate on this thing to keep going to potentially 30. So the upside is $9. And intraday, we're managing 15 cents. So if you looked at a $9 risk divided by 15 cents, that's about a 65 to 1 reward to risk ratio if it goes all the way up. So it doesn't have to go all the way to 30 for this to be an amazing trade. We can take that in small segments. So a daily chart may be more distance than we need. So if I look at the 3-day, as my brother points out, this thing just made the move out of this long grind. It just turned into summer, and now I'm had a gap, and it is just going well, and it's above this critical level at 20. It's already given us a little hint that more is coming. There's the move to 30. There's a move to 35. So there's plenty of evidence that this thing has left the grind and starting to work on the trend. Here's the 9-day. The 9-day just turned. So that looks different, doesn't it?
It's going to just turn tomorrow.
Right. So so if I go to the 30-minute chart, this little gap and then sell off, if just discount that, and now this thing is gapped and gone just like that. It just came back into the fall, but what we have is already starting to make a reversal. So if this continues, we are going to get a summer, fall, summer move in the MACD. So there's a lot of latent power in this thing to keep going. And do you think that anybody that bought in here was surprised by the earnings announcement here? Really? You think they were surprised? You don't think that there was insider trading going on in here? How in the world could you look at that evidence and say, oh, that's just normal behavior? There's no way any of those guys knew that there was going to be a major earnings blowout here, and now everybody is piling in.
China doesn't have the same insider trading rules as we do. They don't care.
So, I mean, yeah, what are you going to do? Catch them?
Yeah.
No. So, so if we go back to the 2 hours, everything's looking good. And now I can frame this one on a 30-minute chart and say, where do I want to put my stop? If I don't own this, Ken, what could I do? Well, I could frame it. I've already made the argument why I could get to 30. It has to get above 21 to leave all of this behind. So if I can put a risk box on here from 1950 to 2050, I can risk $1 tomorrow and buy it here as it breaks out. By the time it crosses 21 on a swing trade, I should have my stop to here so that I take out my risk. On a 3-minute bar, just from today. Just from today. The last hour of trading from 2:30 or the last 90 minutes. There's a PSAR flip. That's 15 cents. That's an R10 risk box. And it went from 1980 to 2045. It went 65 cents in an hour without even looking back. Hey, if you bought this one here when winter turned to spring, or how about when it turns to summer? If you just bought it here, that's a 45 cent. That's a 3R trade intraday just from here to there. And your risk is only 15 cents because that's what the R10 says is appropriate for an intraday risk. So now I can earn three. So let's say I risked $100 on the trade at 15 cents. So I could have 65 shares. And I made $200. And I could sell 4/5 of it and keep, keep 30 shares. Keep 20 shares for the overnight trade, just so you don't feel regret if there was a bump. And now I still and then I keep my stop back down here. I still have the same number of dollars at risk, 100. Only I'm using $100 of risk from the market money to fund the overnight risk, so I can bank 100. And then keep 20 shares with a 50-cent risk. So I still have $100 at risk. My position size is small. Now if it continues tomorrow, I can put the intraday size back on. And now I've reduced my overnight risk, and I've used statistics to manage my risk. Here's treasuries. This was the swing trade using what the trade on 30-minute bars looks like. You have to, the scale on this is goofy. But I did a single 30-minute trade on this rascal starting on Monday. And even if you waited for today for a collapsing dragon, you get that trade. And on the 30-minute, that is as orderly a move as you could want. Our actual trade was from Monday here. But if you just took the trade from today, you're in it when it turns to winter. And you don't even have to hold it overnight. All right, Tesla on the 30-minute. So this was last Friday's Hold Our Nose Emerging Dragon. Hated this one at the time. I hate them all when I start them. That's how I know. So here was the play. You know, I was experiencing a lot of regret because I had two positions on and cashed this one because I didn't want overnight risk. And then a day later, I felt smart because it didn't go anywhere. And then next day it gapped up, and so then I felt dumb. So just the gap and go emerging dragon, it has cleared all the resistance. Now the intraday risk box on that is about $4. That's 1.5%. If I'm using 3-minute bar, it's $1.33. So if I'm using 30 minutes, I'm typically 3 times wider on my stop on a 30-minute chart compared to where I am on the 3-minute chart. The 3-minute chart, it's appropriate for the R10, so that's a buck 33. So I'm on 30-minute chart, multiply it by 3, my risk box is probably around $4. That's also about the size of the PSAR flip box. Standard risk. And then just got rewarded Monday on this one, and then today it just continued to drive on. So this is now, in retrospect, making me look smart. 1, 2, 3, 4, 5. That's holding +5 in 3 days on Tesla on a standard entry that always feels dumb when you're doing it because it feels so uncertain. Yeah, that's why you do it.
Mm-hmm.
U.S. Steel, this was the last of the swings. So here's one that didn't work. This was Friday. It closed really well and then gapped down to here. So we took what was a +3 win and it became a -1.5 loss. That's a 4.5 reversal because of the gap. So how stupid do I feel holding the gap? I always feel stupid. That's why I don't do it that often. And the overnight risk is less than the intraday risk. The stop is wider, the position size is smaller, as I demonstrated with the Rivian trade. But the fact that it had a 4.5 R adverse gap made this a hybrid frog entry, standard risk, and that earned 3R. So the -1.5R that I had on this one is offset by the revenge trade, and now I have no overnight risk, and I'm ready to continue that one tomorrow when the market opens. All right. Sniper trade of the day. This one is in symbol AI. Three-minute chart. It was on a critical state. Here's the opening range, 3 minutes. So that would be my mechanical entry. It turns out that the standard risk box for AI is exactly the size of the OR3 box. That's a coincidence. So the second bar, nothing. Third bar, high or low, and it takes it out. So off we go with the standard risk. My job is to get somewhere my stop above my entry so that I can lock in a no lose plus dinner for two. So that's my job, is to figure out how soon I can get my stop from here up to here. If this is a smooth and an orderly price, could I just trail it? Yeah. Could I use the Uwe exit and wait for this thing to get to us, wait for the PSAR to come out above my entry and then jump it up? Yep, I can do all of those. Study the lesson on 5 different exit strategies. So there's the entry. After 2 bars, lucky once again, this thing moves to here. The second bar moves to here, opens up here, and comes back to here. So now price is at this level. So now there was my initial risk, and there is about 2R of open gains. So if my stop is here, by the time this thing peaks out, opens, and starts selling off, I had better have my stop at least to here, or to here, or to here. So there's 1, 2, or 3. So you tell me right now, when price is sitting right there, do you put your stop at 1, 2, or 3? Type it in chat. If the only wrong answer is keeping your risk down here, you're already holding +2 You were holding +3 at one point. So I see most everybody, the first answers are in right here. So let's see how that works. Just fine. And when it recovers, so the stop at 3 is now just a logical PSAR stop. Your stop is right where the PSAR says is not crazy. So what if you jumped it up in here? You jumped it up to here and held it in place until the PSAR caught up. Now you got paid for exercising some discretion inside this little space and locked in a greater, I think of that as a wedge. When I jump my stop up to here and then I wait for the PSAR to catch up, all I did was put a little shim in there so that as I'm going up the hill and it's pushing hard, I just put a little wedge in so it cannot backslide. And then when the PSAR catches up, I could now decide, do I want to just maintain the PSAR, which is going to look like that? Probably. Or do I want to tighten it up to a 1-bar low or a 2-bar low? Hey, I decided to put a second position on because this went 1, 2, and started going this way and recovered. And I noticed that I've got almost this wrist box off that temporary pullback. So maybe what I want to do is add my second position here. Right? And now my PSAR stop is back here. So let's take a look at if you put the second position on. If you put the second position on here and your stop was previously at the PSAR, you have gained this much on one position. But now if you let that come all the way back to the PSAR, you're going to lose this much on 2 positions. And now what was a 2R win, if you let it come back to the PSAR, is going to be a scratch or worse. So if you put the second position on here, don't leave your stop here. Maybe you just need a tight wrist box and arbitrarily say, I'm just going to give it that much room. Arbitrarily, just on a money management basis. I'm just going to put my stop right there and leave it in place until price grows enough that I can get maybe a full wrist box or a half a wrist box, and then get the second position at no lose plus dinner for 2. That's a decision you got to make and a procedure that you have to have memorized if you're going to look for rapid second positions when you have 2R in hand. Or you just don't take the second position and then just comfortably trade a single position, and now you could decide, instead of being there, maybe I'll just move up to a 2-bar low or halfway up the stack, because here's the last bar. Here's the bar that broke out above the peak of the PSAR or of the RL10. So maybe I could afford to just move my stop to here from here and lock in another full R instead of taking a second position. So you have some choices on. This is a good problem to have. So what do? I put my stop right here. So now I've locked in 1.5 on 1, and now if this exits, that's about 0.4. So if I lose that on 2, I'm at minus 0.8, and I'll get to keep 0.7, which is about half of my open risk. Or half of my open gain, I should say. Turns out Turns out that stop is pretty good. And now my stop here. Now I've got two positions in. The PSAR stop is here. It's still below the entry. So when I see this bar and this bar, I figure I either have to get my stop to here or to here. A 1 bar low or a 2 bar low or a full wrist box up. This position here at 2 is either a full 1R trailing stop or it's a 2 bar low. So you tell me, which stop do you like better, 1 or 2? I like 1 because I got 2 positions on, and that gives me a full 1R win on the second one and probably 3R win on the first one. So if I can put my stop here, I've locked in 4R on 2 positions, and that's a massively good trade. It's important for me to know what my average wins are. So whenever I make decisions like this, what's my aggregate number? I was late and sloppy. My actual strategy was this one, to follow the upper skin of the dragon once the R10 peaked, and I exited here and got filled right there. Still, that gives me this amount of gain on the second position, and it gives me this much gain on the first position. 1, 2, 3 on the first one, and maybe half on the third one. So about 3.5. If you found that helpful, you should consider taking the bar by bar trading workshop, where you get to do that on over 100 live trade patterns with commentary. Now, I missed the heck out of this one. Peak RL10, lower. Now I look at the lows. This is already declining. This is declining. This should have been short right here, or in this bar when fall turned to winter. But I think the one I missed was here. You could get short as early as that, but after that nice run up, I'm not that eager. But when I see 1, 2, 3, and the PSAR flip box is there, I like the heck out of this entry short. I just missed it. So you're not going to lose money on that trade. And now what would we call this entry? And why would we be interested in entering here? Well, it held support twice at the key level. This time it couldn't even get through the dragon. This time it got through the dragon, but not through the PSAR. This time it got through the dragon and the PSAR SFC. And I say that just because this was not a higher low. You know, if you were to go all the way back to here and say, okay, I'm treating that as a higher low, okay, sure. But this one sold off significantly. I treated this as an SSC, meaning that I'm ready to get short on failure here instantly. On that break, I'm ready to get short instantly. But if I'm looking at the upside, the tactical trade is to the top of the RL10. So if this is my standard risk, which is the same size as this standard risk, which is why we call it a standard risk, there's 2 units of reward just back to the tactical peak. I look back. Greg, I look for the R10 comes to points. I go back one. This one has to be higher than that one, or it's not a Kata 2. I've got to see this. The minute I see this, it's no longer a Kata 2, and now it's an SSC when this thing turns. Now when it turns, this thing is now an SSC. Because we just had leg 1 and leg 2. We had 2 legs of downward price action. So this is a speculative SSC entry. And if it fails, it's instantly into a collapsing dragon. Whereas these rising lows mean I have to get long inside here before it breaks above the emerging dragon. As long as I've got higher lows from the previous peak or point of the R10, then I can still classify these as Kata 2s. Because I have evidence that the buyers are buying at higher, they are initiating their buys at a higher level than the last time. This is where the buyers started buying. This time, they're buying here. They didn't wait for it to come all the way down, and that is positive information. And if it's a R10 wiggle, like this, that's how much power the bears had to decay the price, and then the buyers just came in immediately. This is a very positive sign, as opposed to this. Look how far they were able to move it compared to this. This is very positive. So, SSC entry. By this point, let me show you something on this. I said because this is an SSC, I'm ready to get short on a violation of the RL10. That's only at a 0.5 of the standard risk box. So my trigger to execute short is a violation of this price level. Like, I'm not going to wait to see it get all the way to a full 1 hour loss just because I'm following a rule. No, the rule I'm following is that the signal to get out is the base of the RL10 and the beginning of the PSAR flip. So I only have to suffer a 0.5 loss to say this hypothesis wasn't working and I should now be short. Like, I'm not going to wait a full R, and I'm going to instantly stop and reverse. So if I'm trading that with futures, I can be long 1 and have my stop order as short 2. So if this fails, one of them exits the first one, and now I'm net 1 short in a single transaction. And then my target, why is that a good trade? Well, because the next support level is down here. And so if I can get short here on a standard risk, there's 1, 2. There's my 2 to 1 reward to risk on the short side. So the SSC is perfectly postured in a critical state to give me a 2 to 1 trade in either direction, and I just follow price. So it could go to here, the peak of the R10. It could go to here, the last bottom peak. And this thing is just sitting right in the middle. That's a non-directionally biased trade. The point I want to make is that my exit is here, even though I can position size against standard risk. But I'm only going to take, at worst, a minus 0.5 loss. So now the question is, what do you do from here? If your stop if you follow my logic, your stop was here, and the PSAR is just coming to break even, and you see this price action right here. You had 4 bars where it had an opportunity to go. Well, 3 bars had an opportunity to go, and it didn't. That's failure to follow through. So to me, my stop should be right there so that I can lock in this little wedge. I'll just take that. No lose plus dinner for 2. I have no risk to my core capital, and the stop is right here. Check or hold. So you're going to get out somewhere around no lose plus dinner for 2. That's all that was there. And then it closed weekly the rest of the day. So that's about 4R in AI, which has been on a tear to the upside. And it's postured for tomorrow right in a critical state. It was one of the strongest performers in the market today. So if SPY is up, and if the Qs are up and better than the S&P, I can check on AI. If AI is up tomorrow and it's better than the Qs and the SPY, I'm going to pile on that one so fast it'll make your eyeballs bleed. All right, let's go to the traders. This was red. This was from the 4th of July. There just wasn't much move in the market on a U.S. holiday. This is Brian. Excuse me. Trading in the opening portion of the day for, this is DIA on 3-minute. And today was a stone cold quiet day. There just wasn't any movement, so he gets a scratch or no lose plus dinner for 2, micro loss. Yeah, there was a potential for some moves in here, but there just wasn't much wiggle room today. You got exactly what the rules say you should have gotten. Brazil. Maybe this is a bar late. I don't know. I still like that entry. It had a gap down, failed to fail further. PSAR flip. That's worth a shot. Didn't lose. Continuation. Lost a fraction. It just didn't move today. Tim. On AMD, there was a huge OR3 for him. He gets the entry when this whole thing rolls over here. I like that one. He exits at the VWAP. He tries to short again. Doesn't work. Cuts it. The third time would have paid for all on the collapsing dragon. But he had other things going on. Here's the second collapsing dragon, which would have paid. Rivian, he's in the grind after the OR3. So here's the OR3 in Rivian. So a short here. Somehow you got to feel that that's going to pay off. He was grinding his way through this, and he gets paid a fraction. But the OR3, especially after a big gap up and then there's no support, that is kind of a tell. U.S. Steel, he gets two quick shorts and gets .6. So there just wasn't a lot of movement in the markets today. Damien on the 1 minute in the SP, on the S&P. Here's a 1, 2, 3 entry. Here's where the RLXD happens. There's the PSAR flip. He waits for the conservative entry. Standard risk. Gets paid 0.5. Waits for the FMOC announcement. So he stays out of the chop altogether. In the afternoon trade, he plays the collapsing dragon. Enter it here. Standard risk. Gets paid for 1.5. Total 2 for the day. Patience. Welcome to Lou, who's just starting the Foundations course. So here's a different time frame we haven't seen, but everything's fractal. So he's trading on the 15-minute, and this is in McDonald's. Notice on the longer time frames how sweet these little PSAR flips are. So this would have been on the 3rd, and here's today. So I don't mind this entry as a front run. It hasn't hit the PSAR flip yet, but you do get a sense of a rising. But he takes a minus 0.6. Now the indicated entry would be here, the PSAR flip, so you could be long here. He gets it about 5 bars later here, and gets paid off there for +2. No, I'm sorry. Yeah. And he gets +2 on this one, +2 and minus 0.6, nets to 1.4. So this is the 15-minute chart, and you can feel how orderly that is. Like if the 30-minute takes too long, there's nothing wrong with the 15-minute bar. All right, here's Hamad. We're trading a lot. Well, let me see where we're at here. OR3 tries long, takes a 0.6 loss, avoids that loss, I think. No, I'm sorry, it opened there. Read my own chart. How is that an OR3? Oh, I see. That's the standard risk box. Okay. So it opened here. He sees that move, buys it long, puts a standard risk box on it. It fails immediately, so he takes a 0.6, waits for a new high of the day, takes a quick loss, sees the COTA 2. I love this short. I mean, I'd take that one all day, and I'd take that one all day too. So, and I don't disagree with any of those. You got the one that mattered. I might consider another position here on the Z3 excursion. I like this exit to get paid, and I love this re-entry to get paid. Is this really aggressive? Yep, sure is. I think here where you see the Z3s are pinching, I probably try this one more time, because it feels like you've created some room for this to go, like it wants to get to here. But I like that you cut it to like a 0.3 loss, and then from here on, I don't think no, I think I take that trade too. Let me see where I am. So I like that trade. You stayed out of the chop, but this is now a fake 1 go 2. So now you're long here. When that doesn't work, cut it and go long. And now you get paid on that. And that would more than compensate for this one. So the fake one, if I'm short here, I try to get that so that it's a scratch. Hard to do here. There wasn't much time. But that signal right there says that's the fake, and this stop is a stop and reverse. So I think you should be long right here. U.S. Steel, dead money today. A lot of the 4 trades in a sideways chop. Nvidia crushed it. I love that. I love the patience here. So he gets a high. He gets that little R10 wiggle, and that's the wiggle. See, it doesn't even go. So he can get short here, even though the aggressive short is here. I like that one better. And then he nails it. I like that effort short. So I like that whole day in NVIDIA. Yeah, this is about as good as you can get. There just wasn't much follow through today. Today was a low range day. The day after the holidays, maybe people were still shaking off all that protein from the barbecue, but you got paid where you could. I like those. I like that you stayed out of this chop altogether. And I think you got too many things going on in the morning. If I'm reading this right, you had 5 different trades, all of them doing the same thing inside here. Pick 1 or 2. I think you got too much going on at one time. And then by the time you shift to the one that's working, you got one trade that's working for big trades, and you got 5 things that are not working for little trades. So we want to reverse that. All right, we got a bunch from my brother here on MAT, Mattel. Oops, sorry. Dummy. Sorry. Just a minute. All right. All right, so this is Mattel. Two-hour battle drill, 3-minute charts. I think, no, 10-minute charts, and 2-hour battle drill for 23R.
Yep.
Happy birthday to you. Yeah, this thing is, if you will recall, this thing has been in an uptrend
For a long time.
to beat the band. You know, this is on that's on the 30-minute. So there's a 10-day contact. That blue box, the big blue box, is 10 days. This faded blue is 5 day. So this yellow box is today, right?
Yep.
So inside that context, we have a thing that's been
Just crushing it. Yep.
Yeah, on multiple longer term time frames. So, whoops, wait a minute. I'm going to find your chart again. Okay. So this is a PSAR flip, standard entry on a Z3 breakout. 2-hour battle drill twice, standard exit, standard re-entry, 2-hour battle drill entry, recovers, hold
Yep.
support at the dragon entry, 2-hour battle drill. He missed one, got it here, all out. So that's 15.7 in the first couple hours. He's working in the hospital over here. The recovery of the afternoon, standard Z3 pinch breakout, 2 positions added from the 2-hour battle drill by rule, and then at the first sign of weakness, all out, finding the movers.
And then it was getting towards the end of the day, and it went to a bottom in that candle, and then reverted again a little bit. And I was like, well, I just based on what we had seen the previous 10 days,
Yeah.
no
So this is
weakness.
So
Yeah.
this is zooming out. This is zooming out to 9-day chart, and
Yep.
so these are some options entries over here.
Yep.
Looking at failure to fail, and really the target is up around 24.
Yep.
So that option's going to pay off.
And the next
Here's
slide.
this is
Yep.
a 9-day. Yeah, if you get above 24, the next target is 34 and then 46. So if you take longer term options positions, boy, that
Right.
thing could really go. And then on a 9-day, you can see this actually has like a kata 2 style. And then I want you to
Exactly.
also to notice the behavior of the RL270,
Yep.
which is the 270 period.
Yep.
So when you get here, and all of this is on the wrong side, and now you start getting this. This positive move here is enough to flatten out the 270.
Yep.
And here's where it starts to get long. So this is almost a fake one go to buy on dip. But now the longer term guys have a positive orientation on this thing, and that's why 34 is in play. Your
Yep.
first target is 24 to clear the tactical noise, and then 34 for the big payoff after you've made some markets money in here.
Yep. I am
And then
absolutely front running that
yep, and
PSAR flip to
yeah,
go.
and then you have a risk box in here,
Yep.
which gives you about 1, 2, 3, 4, 5 to 1 to here and 2 to 1 to there. So it's justified on a reward to risk basis. When you come down and look at percent R, it's still in the early days of recovery.
Yep.
And it has not even cleared the Red River yet on
Yep.
the MACD. So
Yep.
this is a coiled spring ready. That if
To
it
go.
works, it's going to be large. If it doesn't work, it'll be small. So
Yeah.
that's what you want. This is a okay. That's the same one.
I just zoomed out a little bit farther and gave a little
Yeah.
more
Yep. Yep. Okay. And
you know.
now here's the Rivian. Yeah, this one is just a continuation of the double-digit gains from the previous ones. And here's entry
Yep.
and 2-hour battle drills all the way up. And so
Yep.
the money that you earn in here funds a reduced swing position overnight with markets money, and that's how you sleep at night.
Yep.
Yeah, 4680 is possible in Mattel.
Yep.
So I think that's everything we wanted to cover there.
Yep.
All right, that's everything we got for today. I'm still printing the daily report. I'll get this out to you guys here shortly. And welcome to the new guys, and thanks for hanging in there.
Welcome.
Yeah, the bar by bar workshop is priced at $4.99 for over 100 case studies of detailed work. If you liked what we did tonight, examining in detail with follow-throughs from live trading, that's
Yep.
the single best workshop we have to practice the continuous framing that I believe gives us our craftsman's edge. So
It's with commentary. You guys, Ken has to price it at something, but it is priceless. It is,
it's priced fairly.
yeah. I mean, personal coaching
$4.99
would
puts
cost you
you got to have
way-
skin in the game to do it.
Yeah.
But I defy you to find better value in trading education for $500 than 100 live case studies with expert coaching commentary.
bar by bar.
Yep.
Yeah, it's
It's good stuff. Anyway, see you tomorrow. Take good care. Happy birthday, brother.
thank you, brother. Oh, quick note on the book. I had
No.
the book is in the hands of the editors.
Yeah.
They are formatting and putting our cover and the back cover together.
Cool.
And it should be ready to be published by this time next week. On Amazon, it'll be available.
Have they recommended a price on it?
Not yet,
Well,
because there's one thing that you and I have to do, and Griff and Phil,
yeah.
and that is give them the URLs that we want to put in the book
Oh, okay.
as coupons or
Okay.
connections to the things like the bar by bar trading. Want to have a QR code, and we're going to put a couple of those in the back. So
Okay. I'll give you something.
but that's that's an hour's worth of work.
Okay. All right. Good news.
Yep.
Cheers. Long out.
Peace, everybody. Ciao for now.